Good morning, everyone. Well, narrow range day yesterday, but buyers stayed in control. And yeah, that S&P gap fill we thought would happen in the green room, it just missed it by a little bit. There we go. Give a second here. And yeah. Yeah, right here in the afternoon. Looked like it was going to tag that there down in there. And I think too many were anticipating, some of us were short a little thing. I thought it would get down there and it didn't. It flipped back up, formed this little downside shakeout that went sideways. So it created this support point. Now, yesterday morning, we talked about this little shelf. Things were gapping up and whether it would come down here, whether it would break, whether it would hold. And it did hold. Spoke about the fact that it's extended on a short-term basis intraday. So now we got a new reference point, which is basically yesterday's low. Prices are in the middle of yesterday's range, not really going anywhere. We'll see if it continues to go up or whether we get a little break here today and a little pullback. And it's creating our factory work list. And we see like the middle of the wide range bar. I mean, we always look at the wide range bar and say, okay, there's a reference point of support that we would want it to stay above. You say most bullish, like, right? It breaks the prior day's low, comes into the next day, and it can close in open, can close above the midpoint, give or take. And then looking intraday, is there anything aligned with that? Well, no, there's nothing aligned with that. So it's just a subjective reference point, but it is on a whole number, 480. And remember, that was a sticking point in the S&P 4800. So maybe a pullback into there that it does hold. We'll just have to see. From intraday, this little bottom here, created pivot, broke the lows. Buyers were aggressive. So what happens here? It didn't fill the gap, which would have been kind of like a no-brainer thought. It's breaking down, it goes there, fills the gap, buyers step up again, and then we see where it goes from there. Well, that didn't happen. So what that tells us is that too many were anticipating exactly that and stepped in ahead of the gap and pushed it back up. But again, they couldn't get it much higher, after hitting that resistance. So we'll see if it can take off from here, make a higher high or breaks the low. Pretty relatively tight range, clearly wide range, little narrow range bar. So could be kind of difficult, meaning not much going on, at the open. Right. All right. SPX. We thought maybe things could get moving. It didn't. Excuse me. Neither strike got touched yesterday. So what changed today was the put strike came up 5 handles. As this moved up a little bit, the top is exactly the same as it was yesterday. And I don't think it's going to touch the top. There's no economic news coming out, so nothing to drive it. Short-term extended. That looks pretty safe as a reference point. The top that it's not going to hit. Could it hit the bottom? Oh, yeah. It wouldn't be a big deal for it to do that. So I think the top strike is closer to, the no-brainer. Qs were relatively weak. Not that big of a deal looking at the daily chart. But, these dropped pretty quick. Came down and did touch, prior to yesterday's high, coming down in there and then just held that area And you can see pretty much the same pattern there on the 15-minute chart of holding that level, filling the gap, and then it was pretty boring. Lack of movement for the rest of the day, large markets go. Right here, gapping up a little bit into that range, nothing significant. Where, this is short-term extended, there's unfilled gaps below, and at some point it's going to pull back for sure. Move that up a little bit. Alert. So far holding there. At the futures. As you can see, no big deal. Let's look at the continuous contract here. Yeah. Little topping tail inside, lack of movement. You can see the same pivots here. And that's overnight as it pulled back and creating a support point. So we'll see if that holds. And got an alert there. So a little trading range. And relatively narrow. Not much going on here this morning. Not much moving the markets. IWM. Similar pullback. We talked about in the green room this possibly being a 1, 2, 3. This coming down to test the low of the day, or maybe things got out of hand. A gap fill. Nope, it popped right back up again. Turned out to be a downside shakeout, and then moved higher into the close, up against the 20 MA here, and this pivot, gapping up above the pivot. Okay, so let's spread this out a little bit. Okay, gapping up above the pivot, showing relative strength. So can that now become support? Let's see, pivot, pivot, pivot. It's gotten above it. It's into this gap here. You can see this unfilled gap right here. So some resistance. It's not a whole number. Maybe it pushes up. So on the green, someone was mentioning K-Web. China up. Okay. Guess that's a little climactic kind of pattern there. Banks up a little bit. XBI. Little buy setup, a deep retracement. It's a biotech index that had this big move up into at the end of the year into these pivots here. So that's up a little bit. All right. What else? Transports moved up yesterday. That was really where the performance was. Some of the transports moving up, which underperformed. Russell performed, so a little catch up. We spoke about that yesterday. The laggards playing some catch up, and that did happen. Mid caps got above the pivots. So everything looking good. And as I look at this weekly chart here, something to keep in mind in the next few weeks is this is a typical pattern for an M-top, meaning a climactic type of a run, very shallow retracement. Buyers are very aggressive, where typically prices maybe have pulled back down into this area. And I'm not just mean mid caps, any chart you look at like this, where the retracement is very shallow, and as prices come up to retest the high, it forms another reversal. So we're not there now. Everything still looks like it can go higher, but keep that in mind. Well, Robert, you're asking me, we hope for a new high first. We don't know. So when you're saying we hope for it, why would we hope for a new high first? Well, because that kind of sets up a real disappointment. Meaning it makes a new high that raises the level of bullishness, and then if it fails. So we ultimately have to get the failure, whether it's a topping pattern or a bearish 180 or a gap down under a green bar, some type of shock that happens after it makes the new high. But how it's going to unfold, we don't know, right? But we'll see. Well, the more shock element or failure that there is to a pattern, the better it is. The higher the probability of a reversal. So when we do these MT lives and we talk about shock bars, and even if that isn't the subject of the MT live, Dan and I will always point out that pattern because it's one of our favorites, because it increases the reliability when you can get let's say in this case the majority thinking bullishly, and we see confirmation of that yesterday where the S&P doesn't even fill the gap, and it's like whatever amount it was away, I don't remember, but it was like it should have tagged the gap fill and then popped back up again. And I said in the green room, if you remember, I said, wow, that didn't even fill the gap. And I quoted Greenspan. I mean, that's kind of what was the word? Exuberance, being overly exuberant, too bullish, not to go down. Yeah, irrational exuberance. Thank you. So just the opposite. Anytime you can get a shock type of a pattern like this, something like this, it doesn't always happen, but you have a wide range bar breaking down. And I said this yesterday, and this was related to the 15-minute of the Russell. And I pointed out, here's a 1, 2, 3. Let's see if it breaks to go lower. And part of the conversation was, I said it was an uptrend, and we discussed trend analysis and so on. And I said, if this retraces back up, that's going to be a downside shakeout, which is obviously bullish. So when you get a wide range bar breaking down and a 2-bar, which suggests if it breaks these lows, it goes lower. It's better if it was in a downtrend, of course, and pops back up again, that's a bullish pattern. Now, you look at that and you see, hey, it tried to dip and formed a bottoming tail bar. It tried to dip and form a bottoming tail bar. Every time sellers come in at this resistance area, buyers are lurking down below and they drive it right back up again. We look at these charts, which are pictures, and we apply trend analysis, support and resistance, what we call bar by bar analysis. That strongly suggested it was going to go up. So you could apply this to any stock. It's always the same. So looking at these patterns that suggest something and then it immediately fails increases the odds of, in this case, an uptrend following through. It's really common sense, but you need a thought process that leads you down the path of common sense. And, that starts by removing, the indicators and all these subjective stuff that takes your mind and, opinion away from what matters. And that's the price action. All right, let's continue. Dow's down a little bit, little relative weakness, that, you had the breakdown on the pop up. Bitcoin continuing to correct here. It was the big celebration about the ETF, and that's over. Pretty common occurrence when there's such a focus on something and then the news comes out and it's done. So that's correcting, coming down to some support. Crude oil, gold's up a little bit. Just no pattern yet, just doing nothing. Silver broke down, coming into some support. We'll see what happens when it gets down here. Crude oil popped up a little yesterday. It's just a mess. You got opposing pivot highs and pivot lows. It's on support on the weekly time frame there, which is suggestive that it could go up, but it isn't moving. Well, it's moving, but it's moving in such a, up and down type of a range that, we're still waiting to see what it'll do. There's bottoming tail bars, there's topping tail bars. The only thing that leans more toward that it'll go up is the fact that it's in this area of support, and buyers are stepping up because of that. But so far, they can't get it to clear. Now, there's a bunch of, I think it's today. No, it's tomorrow. There's a bunch of oil news coming out, crude oil imports, gasoline, a whole bunch of stuff that's coming out mid morning tomorrow. So keep that in mind. Maybe that gets oil moving. And other than that, we'll see what kind of follow through. I didn't look at internals, but we can. So, two things here. Breath is coming up to the zero line. If the market was in a downtrend, I would say look for it to roll back over again, and the market would pop back up. It's not unusual for breath to come down like this when the market goes sideways. Because what this communicates is that there's internal deterioration, whether you're looking at whether it was the transports or the Russell or anything that was going down, retail stocks. And when it comes down, comes to zero, you look for it to roll over. That's not the case here. But what I did say yesterday was that typically, and it could have happened yesterday but didn't, is that when you have this resting period, you want to see this blast off going to the top. That's not happening. I also showed you the day-to-day sentiment. And that's not the chart. I don't think that's the chart. Yeah. The AD line. Anyway, you can look at the video from yesterday. Anyway, on Friday, this breakout, the AD line was only like plus 1,000. It should have been plus 2,000. So part of yesterday's conversation was that breadth needed to expand. And that happened to some extent yesterday, but still not to the extent we would really like. And that is more supportive of, if we do get that M top pattern playing out. So here's the equity put call ratio. So many are jumping on the bullish side to, buy call options. The market is going up, but you've got deteriorating breadth. Now too many jumping on that. The total may come into this area if the market's up today. And so, look, we all know that the market's gone up a lot, and risk that there's going to be a correction somewhere along the way. Just protect yourself, which is money management. All yours, Dan.
Good morning. Yeah, look at that DWAC, man. And I got different rules for looking at premiums and I guess typed out. Greg,
Yes.
I'm not switching screens today.
Hold on.
There, I got it. Yeah, no, I had to try a second, third time. All right, so $5 higher. They're $7. I have a rule that says, hey, I want 1% for out of the money naked. So 1% of this would be 50 cents. It's $7. I don't think I've ever seen something this high in my life other than, ahead of the financial crisis. So I don't know what I was asking Pat yesterday, other than, the obvious about Trump back in the picture, blah, blah. if there was anything else under the hood of why this thing's cooking. But I am surely going to keep this on a watch list for a call spread. It will come down. I mean, this reminds me of coin. Look, see this run on coin, and we had a 3-bar reversal. So this was a beautiful, 180, but 3 bars instead of 2 bars. And look what happened. Bitcoin down, 38.5 right now. That was such an amazing sell the news event that I have not seen in a very long time. I think I said on this bar right here, we were trying to sell a call spread. We did up here, and I'm trying to sell another one here, and they sucked the juice out already. But I've been saying this looks like it's coming to 100, and you know, looks horrible. The things that we trade extreme fear and greed, but obviously with our technical approach. Let's go to earnings here. Start off. Well, here, let's see. DXCM alarm. No, not this one. DeBerg. DeBerg. This was in the weekend letter. So I said, let's sell a third up here. I saw some prints up here at 1984. Still looks great. Daily, weekly, monthly. Breakout. Nice, amazingly strong 15-minute chart. That's my only alarm going off pre-market. Amazing. Earnings. We did not do any official earnings trades last night. I think Spider's here retracing a bit more now. Bro, $78. If I were in this, I'd be selling it. I got no interest in that pattern. A nice bull sandwich down here. Like this is like a triple bottom right here. Here's your second bottom. Here's your third bottom. So that, and then a gap over a red bar from a triple bottom. That was a nice entry down there. AGNC gapping down a little bit, no pattern. UAL, nice gap over all this red stuff. Put spread on a pullback. And so, when you have a leader like that, let's watch the whole sector. So look at Jets. I think Jets gapping up. We had the LUV on our list. That gapped up coming in. LUV has a beautiful weekly here. That's a bull rectangle. It was a Climo, it was a retest, a 1, 2, 3. Now rectangle with a void. Target $33. We just need an entry on the daily. Logi, this is a Swiss company. Earnings, nasty gap. That's a big gap. I was looking for a call spread yesterday. There was some reason I didn't. It's typically the reason I don't do an earnings trade if I like the pattern is spread. I don't like the premium received for the risk, or I may not feel like having to go out so many DTE. Agus here, no pattern, and opening flat. You're gone. J&J. One. All right, so that's a 30-minute low call spread. Procter and Gamble, 152. Gap's too big. I actually did recommend for those of you who like PG fundamentally selling the 142s yesterday. Verizon, 41. That's bullish. I thought you need a pullback. GE 129. I love these minimum wage typists on the financial channels. They don't know what to say. And so I see the caption, GE is down despite earnings beats. Like, what value does that sentence have? None. Zero whatsoever. They don't understand what moves earnings. Is the difference in the expectation of what was priced in versus what was announced. Has nothing to do with the actual earnings event. They just, I've been doing this full time many decades, and they're just never going to get it. All right, here, this RTX I put in this middle window. There's a nice, that's a nice gap breakout. So now we got to see, okay, how much room do we have? This has room. This has room. I would love it even more if it were only gapping to the 200, but it's not, it's gapping up another dollar. So it's not excessive. So I get that's a nice gapper. Let's keep an eye on that. RTX, LMT, sideways range. Nothing, we'll come back to it. Nothing to do now. YouTube asking about triple M down 100. That's a big gap. That's occurring on the Dow. Uh, so looking at the Dow, J and J and triple M are drags. Procter and Gamble had earnings we just looked at, and that one's up, but we had more drag than up. Um, and that's why that's lagging today. YouTube, DMRC. Yeah, yeah. Wide range breakout, daily, weekly, monthly. I like it. Has fairly light volume, but nice 15-minute chart too. Um, yeah, I'll put that on the list. HI housing. See, this is the problem when you play things that are so extended daily and weekly. They're subject to accidents, and if you have a breakout failure, you have a gap breakdown, there is a lot of room to fall. So this is a 30-minute low short. Let's put DHI over here. I got EMPH down here. So let's put DHI there. I'm going to put EMPH on another computer. I just have Pepsi alarm go off. All right, so this is a nice short. And I had it posted as a call spread in the weekly options trader. But I also said it's a short watch. And I like the gap down here pre-market. So 5-10 minute low, that's a nice tier one setup. So far I like PEP, RTX, I said I was watching. ALB up alarm. This is a Climo. We sold puts and bought stock. That's a nice gap up. Let me reset the alarm. New alarms 125. Low alarm 121. And that's how I manage either alarms or putting them in a little thumbnail. So let's watch in terms of a sector. Let's watch jets long, housing short. And then obviously these individual stocks. All right, there, RTX, Halliburton, slopping all over the place. CTVA alarm. This is 123 on major support. 30-minute high, CTVA. If somebody wants to watch that for us. I cannot watch everything. WSM up alarm, Upwork up alarm, ADP up alarm. Yeah, I just mentioned that now. I said 5-10 minute low. All right, ADP. Yesterday's high, continuation breakout, and XPI were short puts. Let me set new alarm. $222. Peps, yeah, no, I said 5-10 minute low on Pep, holding up, holding off on paychecks. I'm not rushing into anything. ADP up alarm again. ADP I like better as a new trade, but let's give it some time. Upwork up alarm. This we have a 1/3 lot of a core long EA up alarm. 30-minute high. I like EA. Not rushing into it, particularly with Q selling off here, but EA looks great. Wow, I'm more active here at the open than I thought. ALB up alarm again. Let's move stop break even on the put spread. EA, keep an eye on for me for us. Looking good for a new trade. ALB, we didn't get filled on the put spread. All right, but we have it as a directional. It was in the letter though, the put spread. All right, we're in it at 118. Let's sell some. We're up $7 on ALB. Nice, nice, nice. Sell a third ALB. And that's my quick thing. Now let me speed up. All right, 124.66.
EA is starting to move up above the highs.
Yeah. I said it helped me. Watch it. It's one of my tier
I'm
ones.
letting you know.
Okay, but I'm with Q's tanking here. I'm in no rush, but yes, it's a tier one for me. All right, ALB. Let me get this adjusted real quick. Now diamond's new low. So yeah, I'm in no rush, but let's accumulate these tier ones. RSG up alarm. I think we have a naked put on that. That's a garbage truck Sam used to drive. Now he drives a school bus.